Greetings and welcome to our last episode of Tax Matters. So today I will be talking about estate duty, which is a tax payable on the assets of the deceased. Every human being, the day you pass on, you will be referred to as estate so-and-so. Your family will approach the magistrate office or the office of the Master of the High Court to obtain what we call a letter of authority or a letter of executorship, depending on the size of your estate. Remember, the bigger the estate, the more costs in administering such an estate. An estate is subject to taxation. I know some thought the moment they pass on, at least that will be it with regard to tax matters. Unfortunately, my fellow Mzansi people, in our country, even when you are deceased, the government still requires you to pay tax even upon your death. Of course, with some exceptions, especially if your estate is still small. Now, there are ways you can consider when you're still alive in an attempt to save you a lot of tax payable in the event of your death. Let me share a few with you. Now, the simplest one would be to set up a will. Now, in that case, you will be able to indicate how you want your estate to be distributed. In so doing, you will be making your estate not to have huge volume of assets. And as a result, you can save some tax there. The idea is to reduce as much estate duty as possible. Again, you can consider contributing to a retirement annuity. All contributions into a retirement annuity, of course, they are tax deductible. And they are excluded for estate duty purposes. If you have life insurance policies, it is essential that you nominate a beneficiary, because every life insurance policy or even an investment policy that has a nominated beneficiary on it, such an investment or such a policy will not form part of your estate. Right there, you would have saved on estate duty. I therefore encourage Mzansi people to set up wills now that you are still alive. These days I've noticed many companies, including my company, Old Mutual, you are able to set up your own will even online. Though sometimes, of course, if you do not have much language, or not much language rather, if you do not have much information when it comes to wills matters, it may still pose some challenges. So it is always best to see either a legal advisor or a financial advisor like myself. Within your will, you can set up what you call a testamentary trust for the minor children. You can indicate there what should happen to the money that you have allocated to them. It will not only save you on tax, but will also make sure that your wishes comes to pass, and your minor children, no one will be able to take advantage of them and probably utilize their funds, as that is what scares many of us people to say, what will happen to my children's money in the event I pass on? Set up your own will. And again, in reducing tax payable or simply estate duty on your estate, did you know that all expenses incurred on your funeral, I mean the day when you'll be gone, of course not today, you are still here. That is why you're able to hear me. But all funeral expenses that anyone incurs in burying you, unfortunately, so all such expenses, they can claim them back from your own estate. And when family members does that, it will help big time in reducing the value of your estate because of the money they would have claimed against. In so doing again, we have saved some tax. Remember, my fellow Mzansi citizens, all we want to do is to save as much tax as we can, legally so, of course. Of course, there are some exemptions within your own estate. To dwell more on such, consult your financial advisor or the legal advisor, as I've mentioned. People thought in the event of death, then it is all done. No. A new file of your life begins on the day of your death. What do I mean by that? Remember, all the assets you had. By the way, some people, when I speak of assets, they think of houses and cars. I also refer to cash that you have within your own bank. You will agree with me that there is no beneficiary nomination in your savings account or your check account. Now, if you die, that money in your bank will form part of your estate. And as a result, it will cause the estate duty to go higher. You can safeguard that by ensuring, like I've mentioned earlier on, that you have a will in place and dictate what should happen to such monies in the event of your death. Remember, to wind up an estate, it takes a while. Well, simple ones can take maybe 6 months, maximum 12 months to wind up a simple estate. But others are a bit complex. They can take years. Some, they even never get completed because they are just complex in nature, especially when somebody had many assets. My fellow Mzansi people, I am unable to disclose everything in this brief session. My main advice, as I normally say, consult your financial advisor who will explain to you in detail what can you do to avoid paying tax now when you're still alive, even beyond your life, which should be avoidance of estate duty. My contact details are reflected above. Contact me. Let us set up an appointment. Then I'll be glad to assist you. And oh, by the way, before I can close off, let me also advise my fellow Mzansi people that if you happen to pass on whilst you still had some debts, popular debts would be your vehicle finance, your home loan, or your bond. Remember, that debt does not die with you. Make sure you have enough life cover in place to ensure that in the unfortunate event of your death, you will be able, or there will be enough money to pay off all your debts to ensure your family remains with assets and not liabilities. Mzansi people, thank you so much for lending me your ears in all these 10 episodes of Tax Matters. Please contact me. Let us set up an appointment. Then I'll dwell much on any topic we have discussed so far. Thank you so much. May God bless you.